The American housing market is fragile. For decades, homeownership has been tied to prosperity. When jobs are plentiful, families can buy, invest, and build futures. But when jobs vanish, the dream collapses. Across the nation, entire cities are now facing this dangerous reality. Job losses are piling up, industries are shrinking, and housing markets that once looked unshakable are unraveling. Prices are falling, inventory is building, and families are leaving in search of opportunity. This isn't just about economics, it's about communities on the edge. The very places that once promised stability are now symbols of struggle. And as history shows, when jobs disappear, housing markets are often the first to crumble. Before we begin, make sure you subscribe to Discover the Nation. We uncover the hidden truths shaping America's economy, housing, and future. Stories you won't find anywhere else. Now, let's count down the 10 cities where job losses are crushing the housing market.
Number 10. Detroit, Michigan. Detroit has always lived and died by its jobs. For decades, the auto industry powered prosperity. Generations of families built their futures on steady factory wages. But when those jobs vanished, so too did the stability of Detroit's housing market. Today, that same cycle is repeating in new forms. While the auto industry has rebounded in certain areas, automation and outsourcing are eroding jobs once again. Electric vehicle plants, hailed as the future, are often built outside Detroit, leaving the city behind. Thousands of blue-collar workers who expected security now face layoffs or stagnant wages. The impact on housing is immediate. In neighborhoods where employment has dried up, homes sit vacant, values plummet, and foreclosures rise. Investors swooped in to buy cheap properties, but many of those investments are hollow, creating fragile bubbles that burst when rental demand falters. Meanwhile, rising insurance and property taxes add to the strain, forcing struggling families out. Detroit's recovery downtown, stadiums, new apartments, trendy businesses, masks the deeper crisis. In surrounding neighborhoods, boarded-up houses still dominate. Schools close, crime rises, and demand collapses. Every job lost pulls another thread from the housing fabric, leaving entire communities hanging by a thread. Detroit is a city of resilience, but unless it secures new industries, its housing market will remain at the mercy of every factory closure and every wave of layoffs.
Number 9. San Francisco, California. San Francisco's housing market once seemed untouchable, fueled by Silicon Valley wealth. But now, job losses in tech are exposing just how fragile that foundation really was. Since 2022, layoffs have swept through giants like Google, Meta, Salesforce, and hundreds of startups. Tens of thousands of high-paying jobs disappeared almost overnight. Remote work added another blow, hollowing out office towers and draining foot traffic from downtown. Entire industries that supported tech workers, from restaurants to real estate, are shrinking. Housing, once red hot, is cooling rapidly. Luxury condos in downtown towers sit empty even after steep price cuts. Investors who once paid anything to own property in the Bay Area are retreating. Median home prices, still astronomical, are finally falling, leaving recent buyers underwater. San Francisco's affordability crisis, already dire, is worsening. As jobs vanish, families leave the city entirely, seeking opportunity in Texas, Florida, and beyond. The exodus erodes demand, driving vacancies higher and home values lower. Meanwhile, homelessness and crime have made certain neighborhoods unappealing to buyers. Even with discounts, homes sit unsold. For a city that once symbolized innovation and opportunity, San Francisco now represents how quickly job losses can unravel a housing market built on speculation. Number 8. Chicago, Illinois. Chicago's housing market is being crushed by the slow bleed of job losses across multiple sectors. Once a hub of manufacturing, finance, and logistics, Chicago has struggled for decades to reinvent itself. Now, layoffs in corporate headquarters, combined with retail closures and industrial downsizing, are taking a heavy toll. Pension crises and high property taxes drive businesses out of the city.
Companies that once anchored downtown are relocating to Texas or Tennessee, leaving behind vacant offices. Meanwhile, crime concerns make it difficult to attract investment, further eroding employment opportunities. The result is a housing market in decline. Families are leaving in search of affordable suburbs or new states altogether. Inventory in Chicago's housing market is rising, but demand is falling. Even when homes sell, they do so at steep discounts compared to their peak values. The ripple effect is devastating. With fewer jobs, fewer families can qualify for mortgages. With fewer families, neighborhoods decline, schools close, and services suffer. Entire communities, once thriving with union jobs and steady paychecks, are now hollowed out. Chicago's skyline still gleams, but its housing market tells a different story, one shaped by years of job losses and the slow unraveling of its economic core.
Number 7. Houston, Texas. Houston's housing boom was fueled by oil and gas, but as the energy sector contracts, the city's job market is unraveling, pulling housing down with it. The oil industry is cyclical, and Houston has always been tied to its ups and downs. But today, the challenges are bigger. The global shift toward renewable energy threatens thousands of jobs. At the same time, price volatility in oil markets has already triggered layoffs. Every job lost in energy means fewer families able to afford Houston's homes. The pandemic accelerated the strain. Office vacancies soared as companies downsized. Remote work left skyscrapers half empty. And while Houston remains more affordable than many big metros, its affordability is collapsing under rising insurance, property taxes, and stagnant wages. Foreclosures are rising in vulnerable neighborhoods, especially where job losses hit hardest. New construction, once booming, has slowed sharply as demand cools. Investors who piled into Houston real estate are now cautious, pulling back as rental demand falters. Houston remains a dynamic city with strong migration, but without stable job growth, its housing market is dangerously exposed. Every oil layoff sends shockwaves, and as the industry changes, Houston's housing future grows increasingly uncertain.
Number 6. Orlando, Florida. Orlando built its economy on magic, Disney, Universal, and the tourism industry. But when tourism jobs vanish, the city's housing market suffers immediately. The pandemic revealed Orlando's fragility. With travel halted, tens of thousands of hospitality workers lost their jobs. Hotels shut down, restaurants closed, and entertainment venues went dark. Though tourism has recovered, the cracks remain. Job stability is weak, wages are low, and many workers live paycheck to paycheck. Housing prices, however, soared during the boom years. Investors bought vacation homes and rental properties at inflated prices, betting on endless demand. But now, as families struggle with job insecurity, that demand is slipping. Homes sit on the market longer, price cuts are spreading, and foreclosures are ticking up. The reliance on low-paying service jobs means Orlando's housing market has little cushion. Even small layoffs ripple through neighborhoods, forcing families to downsize or leave the city entirely. Meanwhile, insurance costs from hurricanes and climate risks make ownership even more precarious. Orlando remains a global tourist destination, but its housing market rests on fragile ground. When the jobs vanish, so too does the stability of its neighborhoods.
Number 5. Las Vegas, Nevada. Las Vegas thrives on tourism, conventions, and casinos. But when jobs disappear in these sectors, the impact on housing is immediate and devastating. During the pandemic, Las Vegas had the highest unemployment rate of any major U.S. city, nearly 30%. Entire casinos went dark, restaurants closed, and workers suddenly found themselves unable to pay their mortgages. Foreclosures spiked, and the housing market wobbled under the weight of economic collapse. Though Vegas has bounced back, the risks remain as sharp as ever. Tourism is one of the most volatile industries in America. It depends heavily on consumer confidence, disposable income, and global travel. With credit card debt at record highs and families cutting back on vacations, even a mild slowdown in tourism could trigger another wave of layoffs. Every casino worker, hotel employee, or convention staffer who loses their job represents a mortgage at risk. Investors who once poured billions into Vegas real estate are also retreating. During the boom, corporate landlords snapped up single-family homes, confident in endless demand. But now those same homes sit on the market longer, with price reductions growing more common. Rents, once rising sharply, are stalling, leaving landlords exposed to losses. Las Vegas's gamble has always been its dependence on a single sector. Without diversification into stable industries like healthcare, logistics, or tech, the housing market will remain hostage to the highs and lows of tourism. Another recession, or even a sharp downturn in convention business, could push the city back into one of the fastest housing collapses in the nation. For now, Vegas may sparkle, but its housing market is a high-stakes bet with the odds stacked against it.
Number 4. Los Angeles. Los Angeles is a city of dreams, but its housing market is being crushed by job losses across multiple industries. Entertainment, once its unshakable pillar, has been rocked by strikes, streaming disruptions, and declining box office revenues. Thousands of workers, from actors and writers to lighting technicians and editors, have seen their paychecks disappear. But the losses don't stop at Hollywood. High taxes and complex regulations have pushed manufacturers, startups, and even established firms to leave California for cheaper states. Tech companies that once expanded in Silicon Beach are downsizing, and middle-class jobs in logistics and retail are vanishing. Each lost job chips away at the fragile balance holding Los Angeles's housing market together. The signs are stark. Foreclosures are climbing in working-class neighborhoods, while multi-million-dollar mansions in Beverly Hills and Malibu linger unsold. Even wealthy buyers are hesitant in a market this unstable. Meanwhile, homelessness has grown into a full-blown crisis. Families who lose both jobs and homes often end up on the streets, creating visible reminders of the city's unraveling. Outmigration is accelerating, with tens of thousands of residents heading to Texas, Arizona, and Nevada every year. These departures reduce housing demand, leaving inventory to pile up. Investors are wary, builders are scaling back, and the once endless cycle of appreciation has stalled. Los Angeles still boasts glamour and global recognition, but beneath the surface, its housing market is fragile, hollowed out by job instability. Every lost paycheck weakens the structure, and without stabilization, the city could be facing one of the most dramatic housing corrections in the nation.
Number 3. San Antonio, Texas. San Antonio is often overshadowed by Austin and Dallas, but its housing market faces a unique crisis tied directly to job losses. Unlike Austin's tech-driven economy or Dallas's corporate hubs, San Antonio depends heavily on military bases, healthcare systems, and service sector jobs. While these industries offer stability in good times, they're also vulnerable to cuts, budget shifts, and economic downturns. When layoffs or downsizing hit, the impact is swift and brutal. Families tied to military or medical employment often relocate, leaving behind vacant homes. Service workers, who already earn lower wages than the state's average, cannot sustain inflated housing prices. The result is a fragile market where even modest economic shocks ripple into steep declines. During the pandemic, San Antonio saw housing prices skyrocket as out-of-state buyers and investors flooded in, treating the city as the affordable alternative to Austin. But the surge drove values well beyond local incomes. Now, with job growth slowing, affordability has collapsed. Homes are sitting longer on the market, sellers are forced into price cuts, and foreclosure filings are creeping upward. Outmigration, once rare in San Antonio, is gaining momentum as families seek better-paying jobs in Dallas or Houston. Builders who once aggressively expanded are scaling back projects as unsold inventory piles up. Investors, too, are retreating, spooked by weakening fundamentals. San Antonio's charm, history, and cultural vibrancy remain intact, but its housing market is on unstable ground. Unless new industries diversify the economy, the city risks watching its housing boom transform into a bust fueled by job insecurity and stagnation.
Number 2. New York City, New York. New York City, the financial capital of the world, is facing job losses on a massive scale, and its housing market is beginning to crack under the pressure. Wall Street, long the backbone of the city's economy, is downsizing amid global uncertainty and regulatory challenges. Banks are consolidating, hedge funds are shrinking, and bonuses that once drove real estate sales are shrinking dramatically. Meanwhile, tech firms, which once expanded aggressively in Manhattan and Brooklyn, are cutting jobs. Remote work has gutted the demand for office space, leaving midtown towers hollow. Each lost office worker means less spending at nearby restaurants, shops, and services. This ripple effect devastates small businesses and service workers, creating a second wave of job losses. The impact on housing is severe. Luxury condos that once sold in days now sit unsold for months. Renters face rising costs even as wages stagnate, forcing many to leave the city altogether. Middle-class families, priced out for years, see no path forward in a city where jobs are evaporating and housing remains unaffordable. Homelessness is surging, creating visible signs of distress across neighborhoods. Landlords are struggling with vacancies, while commercial-to-residential conversion projects stall due to lack of financing. Outmigration, long dismissed as temporary, is becoming a permanent trend. Families are leaving for New Jersey, Florida, and Texas, eroding New York's demand base. New York has endured crises before, from 9/11 to the 2008 crash, but its reliance on finance, tech, and real estate makes it especially vulnerable today. If job losses continue, the city could see a housing correction with not just national but global consequences. The city that once never slept may soon face a sobering reckoning in its housing market.
Number 1. Portland, Oregon. Portland tops this list because its housing market is being crushed not only by economic forces, but by widespread job losses across multiple sectors. Once celebrated as a magnet for migration, affordability, and opportunity, Portland has seen its reputation decline sharply over the past decade. Tech companies that anchored the city's growth have downsized, leaving thousands of workers without jobs. Retailers, already battered by online competition, have closed stores in droves. Restaurants and small businesses struggle to survive amid rising costs and falling demand. Each job loss chips away at housing stability, leaving neighborhoods vulnerable. The numbers are sobering. Inventory is rising steadily as more sellers enter a market with fewer buyers. Homes that once sparked fierce bidding wars now sit unsold, even after steep price cuts. Investors who once treated Portland as a safe bet are pulling back. Construction projects stall as financing dries up, and builders scale back plans. At the same time, wages remain too low to justify inflated housing costs. Families who once viewed Portland as affordable now see it as overpriced and unstable. Rising crime and homelessness add to the city's struggles, driving more residents away. Outmigration is accelerating, eroding demand even further. What makes Portland especially vulnerable is the collapse of confidence. Once a city with a strong brand of livability, now it struggles with a tarnished image. That perception shift is driving away not just residents, but also investors and businesses. Without job creation and economic diversification, the housing market cannot recover. When job losses pile up, housing collapses, and in Portland, the collapse is already underway. The city that once symbolized opportunity is now a case study in how fragile housing becomes when the economy falters.
From Detroit's factories to Portland's fragile tech sector,
These 10 cities show how deeply jobs and housing are connected. When employment disappears, housing markets crumble. Families lose homes, neighborhoods hollow out, and entire economies weaken. The question now is not whether these markets will correct, but how far they will fall. Make sure you subscribe to Discover the Nation, because America's housing story is only beginning, and we'll be here to uncover every chapter.